Just let me restate that disclaimer. Uh, Tonight's Saturday session for educational purposes only and merely ideas given by coach. Nothing stated during the Zoom session should be taken as an indication to buy or sell. Nothing stated in the Zoom session should be seen as investment advice. If investment advice is needed, I ask that you please contact a registered financial advisor or fiduciary. With that being said, I'm just going to hand this over to Coach and let him drop some Jews on you guys and share. But thank you all for joining tonight.
All right, thank you, Sean. Good afternoon, good evening, good morning. I'm Coach, and today we're pretty much going to go over or review the trades that I put inside the group on Thursday. I'm going to go ahead and analyze that. What else? And any other questions that you all may have, you can either one, drop them in the chat, or just go ahead and unmute yourself and interrupt me at any time and just ask your questions, ask away. But before I get started, I wanted to show you all this. Remember, let me share my screen. Hold on. Where is it? This one. All right, can you all see this where it says ThinkorSwim Platform Virtual Workshop?
Yep.
Yeah.
All right, perfect.
Yeah.
So for this, I think on the last call we had, I may or may not have brought this up. For those of you who use ThinkorSwim or want to use ThinkorSwim, they had a platform that pretty much went through, you know, how to use it from A to Z. If you missed it, it's fine, because I have a replay for you, and I'm going to go ahead and drop that link in the chat for Zoom as soon as I can find it. And then also next week on the 2nd through the 5th, they're going to have another workshop based strictly on technical analysis. So if you're not able to make this one, I'm going to see what I can do to get my hands on the replay, and then I'll give you that replay as well, just so you can go ahead and have both of these in your arsenal for reference. What else we got? Also, I know I put this in the chat, this book called The Laws of Wealth. If you don't have it, or if you didn't order it, go ahead and purchase this book, whether you get the Kindle version, the hardcover, or the audio book. If your goal, or if one of your desires is to become a day trader, this is one of the books you may want to go ahead and get, so you can better understand the techniques behind the psychology and the mindset it's going to take for you to be a day trader. And what else? I think that's it. All right, so let me go ahead and get to it with regards to the trades I put in the chat on Thursday. So every single morning around, it all depends, around 8:30, 9 a.m. I come to ThinkorSwim and I look at the market watch tab. It's not going to show up because it's not a trading day. But I look at the market watch tab and I try to find some stocks that I can potentially trade that day, or I'll just go ahead and review my pre-built watch list. And what I do, I look at after the pre-market activity. So let me try to find the 29th right here. So for pins, we already knew they had earnings the prior day. So you see how it gapped all the way up post-market. And when it came back to the pre-market, before market open, I knew based on my analysis that, hey, pins needs to hold the 6370 support line right here in order for it to have a bullish continuation. And I also knew how far the target was going to be, again, based on pre-market analysis, because you see it hit the 66th point line right here during pre-market. So I knew, hey, it could possibly go here. Another thing you could do is look at the average true range, or ATR, of that stock. That way you'll know what you can expect in regard to a move. So for pins, I knew that the ATR was roughly $4. So if I'm getting in pins around 63.70, I can, with confidence, expect it to go up to 66. So that's a realistic or a high probability of that trade going through. So as soon as, let me drop it down to the 2-minute time frame, because this is what I look at when I'm trading. What day was that? The 29th. So as soon as pins open, it gapped higher, then the sellers brought it back down to the same level, 63.70. Remember, 63.70 is, as long as it does not breach 63.70, you're good to go. On this next candle, this would have been a hell of an entry for you to take right here. On that next second 2-minute candle. That would have been your entry. You would have rolled that bad boy all the way up to your predetermined price level of 66, and you could have got out here. But another key I want to give y'all is this. For this blue line, this like turquoise kind of blue line here, this is the 9-day moving average. And basically, the 9-day moving average is used as an indicator of momentum for the stock. And this is something that day traders use, or I use it all the time. So as long as the 9-day moving average is trending upward, and also the further away these candles are from the 9-day moving average to the upside, that's a very strong trend. That's a very strong momentum. So even though you predicted that it could go to 66 based on your pre-market analysis, if you're watching this in real time and you see that it's so far away from the 9-day moving average, technically you could continue to ride this up because they work like magnets. Eventually, it's gonna snap back to it or gravitate back towards the 9-day moving average. So if you would have stayed in this trade, you would have got out like right here. As soon as you would have seen it start to consolidate and go sideways, that would have been your exit. So that was pin. Do I have any questions for pins? Where's the chat? How do I pull up the chat? Hey, Sean, I can't pull up. I don't know what happened to the chat. So if anybody is asking questions, just go ahead and interrupt me because I cannot see the chat at all. All right, so moving on to the next.
I have a question for you. I'm sorry. So in regards to the 9-day moving average, so you're saying that the secondary candle we could have entered, and we could have also entered at the third candle as well and rode it until it consolidated, and that would have been our exit point?
So I'm gonna answer that based on what I would do. So okay. No, I wouldn't. So after this second candle, if I miss this entry point, that's it for me. Like if I miss this candle, remember this represents a 2-minute candle. I'm not chasing this stock at all because remember, say I got in somewhere, say I got in at 65.77, and remember my target was 66. That's less than $1, so I'm not even going to take that trade. I'm not going to take that risk because what could happen, what I see happening all the time, is usually it'll spike up to this resistance area, and then the next candle will drop right back down. So if that was the case, if I would have got in after this move, after my entry, and say it did come up to the resistance and the next candle brought it back down, I'd have lost whatever I was expecting to make on that move. So for me personally, and for some of you who do decide to day trade, you want to adopt a strategy of if you miss your entry, don't chase it, let it go. Because I've seen it happen to me time and time again where I miss my entry, and then you try to get in late, and then the market movers, the institutions, pull it right back down, and now you're in a loss.
Okay, so getting in at that second candle, then you could have rode it a little bit longer until it started consolidating?
Yes, correct.
Okay.
Yeah. So you get in on that second candle, you ride it up to your target, which was 66. Mm-hmm. See how far away it is from this moving average?
Yes.
That's a strong uptrend. And remember, the technical definition of an uptrend is higher highs and higher lows.
Doing breakdowns, so one of the reasons why I've actually stopped doing the 60 seconds is because I'm actually going to start moving into
episodes on the second candle. You just want to make sure that you enter above the close of the first.
In season 2, one of the episodes, or over a series of episodes, I'll be breaking down every single one of the pictures.
Can you explain that?
Nice. That's gonna be dope. All right. Is this rollout coming out soon?
Shamika, mute for us.
I have to just wait and find out. All right, now get off the phone because you're.
There we go. All right, what was the question?
On the second candle, the candle that you entered on, you just have to make sure that you enter above the close of the previous.
No, you could have, as soon as the candle opened and you seen it have forward momentum, you could have just jumped in immediately. Because remember, you already analyzed that, hey, it needs to hold this 6370 support in order for it to go higher. The first candle, it held it. You see this first candle, the low was 6375. You put your support at 6370. It never broke.
Okay.
So when the next candle opened up, you could have just jumped right on in. These top wick, this wick right here on the first candle, this means that sellers pushed the candle back down. Right. But their attempt to bring it lower than 6370 failed. So that means that this bullish trend is still in play. So you could have got in on the next candle. Okay. And then rolled it up to 66, which was your original target. And that's where I would have gotten out. But I'm just letting you know, hey, you don't have to do that. You could just, if you're advanced, you'll know that as long as this is, the further away these candles are from this moving average, the stronger the trend is. So technically you could have kept riding the momentum up, and then you could have got, $1 or $2 more out of this trade and then got out. But for me, like I said in the first one, I'm only looking for $1 move. This one here was sweet. If I would have caught, I didn't catch it, I missed it. But this would have been a $3 move, and in options, that's a hell of a move. That's a nice profit. And remember, this happened in 2 minutes. It went from 63 to 66 in 2 minutes, or 4 minutes. I'm sorry. And then that's it. You're done.
So is this the case? Like, if it's bullish, if you're closer, then is this a signal for reversal?
Yeah. So if it's bullish for the 9-day moving average, if the trend is bullish, that means that the candles sit on top of the 9-day moving average. If it's bearish, go over here to this area here. If the candles are below the 9-day moving average, that means it's bearish. Does that make sense? Do you see it?
Yeah. Okay. Got you. Thank you so much.
Candles are below the 9-day moving average. That's bearish. So what you never want to do, you never ever want to place a trade against the trend, ever. So if this is at the opening, if this is trending up, you do not buy puts. You do not short this stock at all, under any circumstance. You want to wait till you get confirmation and then make the short. And that's what I did. Once I knew I missed this move for pins, I was already watching the stock. So I saw that it couldn't move any higher, and then it started consolidating, which just basically means it's moving sideways. So that's one of two things. It's either going to consolidate to go higher, or it's going to consolidate and they're going to bring it lower. So I put this level right here, 67.20. I said, yo, if this cracks 67.20, then I'm going to go ahead and take puts. In anticipation of that, where did I get in? I think I got in here on this green candle. And I alerted it in the room. I don't know what time I got in, but I made the alert in the room and said, hey, watch pins. If it cracks 67.20, you can go ahead and take this. You can go ahead and buy puts and ride this bad boy down all day. And that's exactly what happened. As soon as it cracked 67.20, I knew we was going to get more downside if it cracked 67, and then it just continued to roll all the way down. And that's a nice bearish move for puts if you would have missed the first. I don't know how to put something on there.
It's on Zoom. It's not on. So what other indicators do you use for your day trading? So you indicated the 9-day. What other ones do you use?
Only thing I use is the moving average. So on my screen, this like turquoise blue line is the 9-day moving average. This, I guess, purple or dark blue, I don't know. This blue line right here, this is the 50-day moving average, and this pink, like reddish line is the 200-day moving average. That's the only thing I use as far as indicators. I don't use any. I don't use the VWAP. The VWAP is
Okay.
good. I know how to use it. I don't use.
So you don't use RSI or MACDs or anything like that?
No, because all that's so when it comes to day trading, you want to
go with another outfit.
You want to
all white.
take advantage of current price action as you see it. And
Okay.
with those indicators like the RISI and everything else, they lag because they have to calculate everything that's going on prior to.
Okay, so you don't even pay attention to volume.
No,
that doesn't matter.
No, I mean the only way volume matters is you'll see where the trend is kind of running out of gas in a sense. If you're watching these candles going up and you're seeing this volume moving to the side, you can see like these first couple of candles of volume is a lot of the candles are going up and the volume is going up. It is increasing also. Only when it starts to consolidate is when you see the volume decrease compared to the open. So that's how you know, hey, they're not doing anything. They're just consolidating. It's just moving sideways. So there's no need for you to take a long or short when it's consolidating.
Coach, I got a question. So, if had you caught that move, what do you determine your strike price based upon? Based upon where you entered at, or?
For the which move?
Like on this move right here, you would have got in around that $63, $64 area. What would you have chosen, or how do you choose your strike price based upon that?
I choose my strike price based upon the stock price. So if I'm seeing my entry is close to 64 or 65, I'm gonna buy as close to in the money as possible. Now this is something that you're just gonna have to decide what you want to do. For me, I would have took the 64 calls, even though I know I can potentially get up to 66 and it's cheaper. I'm gonna make more money buying the in the money option because the delta is gonna be higher at 64 than it is at 66.
Because the who's gonna be higher?
The delta.
Got you. Yeah. Okay. Got you. Okay. And you only gonna be in it for a hot second, so.
Correct.
I get it. Oh, okay.
So that was pretty much the analysis for pins. And even if you missed the alert, if you saw my analysis, I told you everything you needed to know. Pins needs to hold 63.70 support for bullish continuation, potential upside to 66. That tells you everything you need to know with regards to that trade, if you're going to day trade it. And remember, if you'd have missed this candle, don't take it. Or I would recommend you don't take it. Just let it go and move on to something else, which is what I did.
So I have a question when it comes to day trading. How do you determine how much of the specific stock you want to buy for the day trading purposes?
That's a huge component. Risk management. Like I mentioned in the first session, for me, I do not trade more than 20% of my available account balance for any trade.
Okay.
At all. So that's one thing. For two, I already have a predetermined risk that I'm going to use with regards to my stop loss. So that's how you just using those two things, that's how you're able to have longevity in day trading and also not blowing up your account. Because if you have $2,000 in your trading account and you would have got in this bad boy and used the whole 2,000, what if the trade would have went against you? Right? Like say, let me show you an example. This leads into the next stock I put into the group, into the chat. So for IPHI, I said 136.68 is support. Where is that? Right here. And if it holds, we can make a bullish move up to 142. And then I also gave it a heads up to say, hey, it has a wide spread, so just be careful. Now, as this stock opened up, say you didn't wait, or say you just immediately bought calls expecting it to go to 142, and you use your whole $2,000 account balance. This one red candle made a $5 move. It went from a high of 136.93 all the way down to a low of 130.69. I'm almost guaranteed you to blew up your account just on that one candle. if you would have used your entire account balance. Now, had you only used 20% of your account balance, you'd have been fine. It would have been no issue. There wouldn't have been anything for you to have anxiety over or to be upset about, because you knew the risk. You took a calculated risk before you even entered into the trade.
Okay, so I guess going back to that initial question I asked. So if you have a account size of like 2,000 and you're doing 20% of that account size, and that's what $200. So that could probably roughly only buy, it depends on the price of the specific stock. So that's really not doing too much. Is that correct?
So you don't want to look at it as if, so you don't necessarily want to go after home runs. Your goal is to take high probability plays, right? And for two, it doesn't matter what the size of the option you're going to buy. You just want to be profitable at the end of the day. Now, for this stock right here, if this is something that you can't afford, if you go by that rule of 20%, then you trade something else like the SPY. Let me show you. Trade this all day. If the data loads up. Okay. Go to the weekly options. Look, you can get contracts here for $100 if you trade the SPY. And if you get a 30% move, that's $30. And then you just keep incrementally adding it up every single day. Like, you don't have to go for the home run. You don't have to go for, $6,000 in one trade every day. That's not the goal here. The goal is to be consistent and to make money, and just to have high probability trades every single day. Because it kind of, if you go for that home run and you hit one, you're gonna expect to make that home run every single time you trade, and that's not ideal, because it messes with your psyche. So if you only have $200 to make a trade, you could have bought 2 contracts here on the SPY. You go up 30%, you got $60, you're done. And then just do that every single day until your account balance just gradually grows in size. And then that $30 just made on one day, eventually a month later, that turns into a $300 day. And then it'll turn into a $500 day. And then it'll turn into you consistently making $1,000 every single day. But it's going to take some time. And you don't have to hit home runs. You do not.
So you day trade weeklies, not necessarily just the regular stock itself. Like you day trade weekly, like call options or puts, not the stock itself. Okay.
Correct. I don't care about time. I don't care about the theta.
Okay.
I'm only in these trades for less than 30. For me personally, I'm only in these trades less than 30 minutes. Sometimes I'm in them for 8 minutes, 10 minutes. I'm not in this trade long. I'm not entering into this day trade and expecting it to turn into a swing trade. If it goes against what my analysis is, that's what my stop loss is for. I get stopped out, and then that's it. I'll move on to the next. So that's why I don't buy out the money calls, because what you do, you set yourself up for failure. What you do, if you start buying, calls with time on them, and the trade doesn't go the way you want it to go. For one, you're using way more capital. For one, and then for two, you got to sit there and wait. It's a waiting game. I'm not waiting. If it hits my stop, that's it. I'm done, and I'm moving on, because it was a calculated risk. Did that make sense?
It sure did. Thank you.
Mm-hmm. All right. So and remember, I can't see the chat. So if you have any questions, just go ahead and interrupt me. For IPHI, I said it needs to hold 136.68 support. If it holds, you can make a bullish move higher to 142. It has a wide spread. I gave you everything you needed to take the trade. You can see at the open, it was a very large engulfing candle. If you see this, if you ever see something like this happen where it moves down extremely fast, my advice is don't take puts at all. I wouldn't do it, because usually what happens is when you get a candle that opens like this, it'll normally immediately reverse to go higher. Or even on the flip side, if you see a large candle that makes like a $5 move in the first opening, it'll usually reverse to come back lower. So if you would have bought puts on the second candle, you probably could have made a couple dollars, but you would have got wiped out as soon as it would have reversed. But for this trade, at the open, I missed this because I went to look at something else, but the analysis is still intact, right? Even though it opened bullish. So it opened bullish, it came down to my weekly support level, and then it started to trend higher. Then it came up to the monthly, and then guess what it did? It came up to my pre-market analysis level of 136, and then it started to consolidate. So I told you before, the only thing it's going to do in consolidation is either going to go up or they're going to consolidate to bring it back down. If you were watching this trade, it was still in play as long as it stayed above 136.68. It got back to this level, 136.68. I told you where it could go, 142, and that's exactly what it did. They got to 136, and then it trended up to 142. So this would have been your entry. Well, you could have got in on this candle because you got your confirmation, and then you could have got out up here somewhere as it approaches 136. Did that make sense for IPHI?
Yes. What was the ATR on that one?
Let me see. I don't have this on my watch list. I mean, $6.
Okay.
So yeah, if you're taking the ATR into consideration, like for Neo, right? And this leads into the next call I'll call down in the chat. Was this today? Yeah. So for Neo, I said, hey, Neo is going to be bullish above the level of 28.49. It could test the previous high of 29.40 based off momentum. What do I mean by momentum? Let me show you. Based off of this momentum from the previous day's momentum, right? So for Neo, I gave you the high of 29.40 based on the ATR. I said, yo, Neo's ATR is only roughly $2. I'm not expecting anything more than $2 out of Neo. Now it gave you $3 if you would have took this trade for the whole day. But for this one, I knew as long as it held 28.49, it was good to go. And even with these pullbacks, this is where I got stopped. This is where I messed up. I think I was doing too much. And I don't know how I missed this. So I put my stop loss at 28.80 when really it needed to be down here at 28.50. And that was based on my pre-market analysis. I don't know how the hell I missed this. But either way, if I'd have had my stop at 28.50, long as it doesn't break this first candle on the way down, and this is what someone asked me what's a fake out. This is what you call a fake out right here. These candles, as they're going down, this is a fake out. This is getting everybody, all the inexperienced day traders out of their position in order before they move it higher. This is what a fake out looks like right here. But remember, you're already prepared. You already know, as long as it doesn't break the level that you already identified pre-market, you can stay in this trade all day. So even though I got in here, I got in on the second candle, even though it rolled back down, it never came back down to 28.50. So you could have just rolled that bad boy on up. And then, you could have got out, after $1 or so. Yeah, I would have got out. I probably would have got on this candle because I see it starting to consolidate and it's like a magnet. The 9-day moving average, it got back closer to this area. So yeah, I would have got out of the trade here. Even though you can clearly see on like a 15-minute time frame, it's still in a strong uptrend. But me personally, like I said, I'm not trying to sit here all day in one trade. I'm trying to get out in less than 30 minutes. So that would have been it for me. So this bar, right, this second bar on the 15-minute chart, this is a dollar move right here, just in this one bar in 15 minutes. I'm done. And I'm moving on to the next trade. Do I have any questions with Neo? All right, moving on. Etsy. So for Etsy, for my analysis, I said they have support around 136. Let me draw it. They have support around 136. If it breaks that, there's a bearish outlook, and the next level it can possibly go to is 134. And that's exactly what it did. You would have, as soon as the market opened, based on your pre-market analysis, after this candle here, after you see them drop it below one, the 9-day moving average, which is a trend, and two, if you ever see them take it below the 50-day moving average, that's a bearish sentiment. You have a higher probability of being successful if you brought puts, knowing those two things right there. Just knowing that there's a high probability that price movement will continue to go down, right? So you would have got in your trade on that second candle, somewhere in here. It didn't matter where. And you would have stayed in that trade because, for one, you don't want it to breach. Well, even though these top and tails breach 136, for me, my stop loss would have been, let me see. I'm a little bit more lenient. So I don't want to have an aggressive stop. My stop loss would have been probably the top of this candle. And then you could have just rolled that bad boy all the way down to 134. Or if you would have got in on the second candle, you could have got out here because it came down to 134. This candle ranged from a high of 137.33 to a low of 133.90. That's a $3 and some change move. You could have just got in as soon as the candle opened up and rolled it all the way down and then got out. So that would have been one trade in literally 2 minutes and you'd have been done. Then you can see it kind of consolidated a little bit. Then they brought it all the way back down. It continued to trend lower. So that's it for Etsy. What else? CTSH was another one I took, or I gave you all.
Coach, can you still not see the chat?
Nah, I can't see the chat at all.
Deshaun said, oh, never mind. That was a long time ago. I'm sorry. I'm gonna mute myself.
Coach, can you go back to Etsy for a minute?
Give me one moment. How the hell do I pull up this chat? Whatever. All right, Etsy. Okay. Do you have a question about Etsy, or you just want to look at the chart?
No. Maybe it was pins. Go to pins.
Mm-hmm.
Okay, yeah, it was pins. Okay, so I did the pins trade and I stayed in pins till it hit 68. You sent out a thing saying that if it broke 67.20, that you can write it down. How do you know when to come out? Because I then went on the put side and stayed in it, but like it was just a guess. It was just a hunch. I was like, it's just gonna keep going down at this point. How do you have to get out of your put?
For me, I already what you want to do is go ahead and establish a predetermined, criteria.
I did that.
You do? Okay.
I
What's
did,
your criteria?
and I didn't get out. I didn't stick to it because I felt
Why
like
not?
it was just going to keep going down.
Yeah, that's kind of, you know what? I had that same issue too. That, you know what that's called? That's called greed. Like
Yeah.
when you that's what that is. And I'm gonna show you this. It just happened to me recently with Nike. Like with something like that, you gotta just take your profits and just go home. Like straight up. Like, and that's something you're gonna have to work on. And if you buy that book that I recommend, it'll definitely help you with that approach. Let me pivot for a little minute. And this just happened recently with Nike for me. This was one of the days I caused hell in the chat room. I didn't even mean to do it. Because I didn't know y'all were talking about swing trading night, and here I am talking about day trading. But yeah, this happened on the 24th. I was in a Nike trade. Let me go to the 2-minute chart. Oh, wow. And that's another thing you need to do. You need to get you a trading journal and analyze all your trades, win or loss. That way you'll know, not to make the same mistake again. Or at least that works for me. Just find what works for you and, just stick to it. So for Nike, I made 2 trades that day in Nike. I caught this at the low. I bought calls to go higher. I knew to get out here based on my analysis. So I made money there. Then I see it coming back down. I got in here, right? Matter of fact, let me go higher. Let me show y'all the full view of why I had so much greed. So you see this rectangle area? Now remember, all this stuff beyond the date of 9/24 is irrelevant. Just look at 9/24. They had earnings the prior day and it gapped up, right? So I notated this gap. I said, yo, there's a gap right here, right? So just keep that in your mind. Go back to the 2-minute. What day was that? 9/24. Right here. So what I did, I got in here, right? I bought puts and I rolled it all the way down. This right here, this level, 123.90 should have been my exit because I already had a predetermined, support level. But my eyes got big and I got greedy because I seen that, if this breaks, it's going down to fill this gap. You see this? If this breaks, I was thinking it's going down to fill this gap. That's all. I was so excited to be like, yo, I'm about to make a lot of money on this trade. But that didn't happen. It broke it, and they brought it right back up. And I should have got out here at 123.90. I didn't. And this big green candle right here put me at a loss, even though I got in up here. You know why I put me at a loss? Because this is a strong candle. This was a low of 123.87 to a high of 124.50. That's over $1 move in 2 minutes. Do you know what that does to the implied volatility, which directly impacts the delta on your trade? That will kill you. So I took a big L on this. Well, not a big L, but I lost, even though I got in up here at a higher stock price. So that's why you don't want to let greed take over. Even though, you're right. Like you can be right to say if it breaks this support and you see this gap down here, that it can go down there, but it doesn't necessarily mean that it's going to go on the day you want it to go. Because if you zoom out, remember all gaps are usually filled. If you zoom out and look at the day chart, they finally came and filled it. They tapped it on the 28th, and then they finally came and filled it yesterday. That gap was finally filled.
Coach, I have a question for you. Sorry.
Go ahead.
On your entry, what was your entry price for Nike? On your initial for your call when you were buying your call.
Okay, hold on, let me go back to it. When I was buying calls, I think I got in like right here. I didn't notate it on my chart because it happened so fast. I got in at like 125.38, something like that. Then I wrote it up.
So what call price did you buy for that?
The 125s.
Oh, you bought 125s. Okay, so you buy as as in the money as possible for calls and puts for day trading. Is that correct?
Correct. And I bought
Okay.
weeklies.
And buy weeklies.
Yep.
Okay.
Weeklies on.
Gotcha. Thank you.
Yep. So yeah, just remember, if you're gonna take this trade and you see and it goes down to your predetermined level, take your profit for one. Don't get greedy, because on this candle I got wiped out. Even though I brought puts up here at 125 because this was a strong candle, which directly impacted the implied volatility, which impacted the premium, which impacted the delta. So now I'm in the negative. When I had the bag, all I had to do was just sell. So that's what greed got me.
So because you do it this way, you don't really worry about the Greeks because you're in 30 minutes or less. So you don't pay attention to like the delta or the gammas or anything like that.
Yeah. That's the reason why I bought in the money, because let me see. This is just a SPY I'm looking at. So say you expect the SPY, you already analyze it. You expect the SPY to make a move to 330, and you bought the 327s. Look, the 327 delta is 0.50. So you're gonna get 50 cents on every dollar for that trade, as opposed to if you bought the 330s, you're only getting 36 cents. Okay. So yeah, I do pay attention to this. I pay attention to the implied volatility. I pay attention to the delta. I don't care about the theta because I'm not holding this for long. I'm not holding this overnight. I also pay attention to the volume because I want to be able to get out of my trade. Like this, the SPY is a great one. It has a lot of volume and it's cheap. Now, if you see something like this, if you see something like this, I would look at this widespread, and look, there's no volume here. I would strongly advise you not to trade options on this. So what do you last thing you want to do is be stuck in that holding that option call when you're trying to sell it. With the SPY, you're not gonna have any problems getting out of that.
So my question is, so what do you like? What's your like range that you like for your delta and your implied volatility for your calls or your puts?
0.40.
0.40 or above for the delta?
Yeah, that's what I like. But I mean, if it's not a hard rule, like if it's at 0.30 and it's in the money at I doubt it to do that. If just say it was in the money at 0.30, I'm still taking that trade.
What about your implied volatility?
This like anything less than 50, I'll take it. If it's like at 100, I'm not touching it, because that means it's already priced to the max. And then the second that I get into it and the momentum slows down, even as the stock price goes up, you already at a loss because that you missed the move. So yeah, if it has a high implied volatility, I'm not gonna touch it.
Can you explain that one more time, the volatility?
Basically, the lower the volatility, the better it's going to be for you to the upside, right? So that means that the delta is not going to be as high when it's lower, or meaning that as the price goes up, you're getting in at an optimal price. Because if the implied volatility is high, like say at 100%, that means the delta is going to be extremely high. And even as the stock price goes up, after you get in it, and then the stock starts to consolidate, move sideways, and then go higher, you still have to hold on to it if you were going to expect any profit, because you missed the move already. You got in at a higher premium, if that makes any sense.
Okay, so one day I think Todd mentioned that he doesn't get into a trade if it's gone up at least 8%, I think he said, because you really missed it or it might be too late? Is that like the same thing? Okay.
Yep.
Okay.
Yep, pretty much. I don't chase it. If I miss the move, that's it. Move on to the next. Because you have to remember, like, even though, let me show you, let me kind of go through my setup. You won't be able to see everything I have set up for whatever reason, but I have two 24-inch monitors and I have a 16-inch MacBook Pro. So on this screen, I have two charts open. And then remember in ThinkorSwim, you can actually detach this. So what I'll do, I'll detach it, and on the other monitor, I'll have up like either 6 or 8 screens. And then within that, I'll have up, whatever I'm looking at for the day. So that, even if you miss a move, you always can come back and have an opportunity to see something else. So if you miss the move, don't worry about it, because you can always come back and find something else. So yeah, that's my setup. What else? Any other questions?
Coach, for instance, that pins play, right? How are you?
Hey, how are you?
I'm good. For that pins play that you mentioned, I did the trade with you, and I got out at around the time that you said that if you see that the trend was going back down, would you likely re-enter that trade, or would you just leave it alone?
No, that's called greed.
Greed. Okay.
Yep. You gotta leave it alone. Once you make your money, leave it alone. Let it go. Because I got burnt like that before too, messing with Apple. Like they call that revenge trading and greed. Like once you already get your bag, just once you make 2 successful trades for the day, just leave it alone. Let it go.
Gotcha.
Because you're gonna always have another day to make money. Always. The market ain't going nowhere.
Okay.
Deshaun asks, do I only use a 9-day moving average yeah. I only use, the only indicators I have is a 9-day moving average, the 50 moving average, and the 200. That's it. I don't use the MACD. I don't use the VWAP. I don't use Bollinger Bands. I don't use none of that. I mean,
Do you use the simple or the EMA?
Simple. Once you learn, your technical analysis, your chart patterns and candlesticks, you don't need none of that stuff at all. And remember, it lags. So and it's just too much stuff to try to calculate in your head. It's like you're looking at the RSI, you're looking at the MACD, you're looking at the candlesticks, looking at the chart pattern, you're looking at the moving averages, and you're trying to, analyze all this stuff. It's just too much going on for me. I'm not saying not to use it. I'm just saying I don't use it.
Coach, just to run it back, what was that percentage for implied volatility? Your range, was it 40% and below? Is that correct?
40%. Yeah, that's fine.
Okay, or below, correct, but not higher.
Yeah, and the delta is 0.4.
Okay.
That's what I
like.
But
you have played like a 0.30.
Yeah, for sure.
Okay. So I can put like the range of 0.30 and up.
Yeah.
Okay, gotcha. Thank you so much.
Maybe I missed this. How do you find all these per se like stocks that you think would be good plays for the day and not necessarily a swing trade?
2 places you can go. I go to Market Watch. it's not going to populate because it's, you know, it's not a trading day. But I go to Market Watch and it's just a pre-built scanner, lovers and losers, post-market movers and pre-market movers. And then remember, I already have a pre-built watch list over here. So these are stocks that I watch all the time anyway. And one thing you can do, this is why it's so important to do this. Like the stuff I'm giving you now, you're gonna be ahead of 99% of every single day trader. You're gonna, you know, have that much more of a success rate because 99% of traders don't do none of this shit I'm telling you about now at all. I'm telling you, they don't do any of this pre-market analysis. They don't do any technical analysis. They don't draw their support and resistance. They don't analyze the pre-market levels. None of that. They just buy and sell. So yeah, if you have a pre-built watch list and you already chart stuff up, you can come back and study it to see how it moves within these levels. So then that's when you can make your entries based on, you know, your pre-market analysis. And, you know, putting it together, combining it with your technical analysis, with your ability to identify uptrends and downtrends, your ability to spot out chart patterns, whether it's bullish or bearish, to identify your reversal patterns. All that stuff makes a huge advantage over the average trader. So that's the bottom line is you just got to put in the work. Now, if you don't want to put in the work, you could always use a alert service, but I'm going to caution you. I'm going to give you some game on that. So when it comes to an alert service, like I said on the last one, they should at the minimum give you your stop loss, your entry point, and also your profit taking point. What else? Also, I would highly recommend that you ask them, whoever you decide to sign up with, make sure that they trade every single day with you, or like whatever room they decide to use. If they do that, if it's a Facebook group, whatever, if it's a Slack group, make sure that they're actually trading with you, as opposed to just telling you, hey, buy Zoom when it gets down, when it gets at $100. And if you were in the chat that day on the 29th, as I was calling out these alerts, that's the type of service you need to pay for. You need to pay for somebody who's telling you what they're watching. And also, hey, I'm looking at pin. It's like I gave it to you before it even happened. That's the type of service you need to watch for. Because when it came to pins, I was telling y'all, yo, I'm watching this for a potential reversal. If it gets down to this level, get puts. And then I told y'all that I think 15 minutes before it even happened. So if you were watching it and you pulled it up on your chart, you was already prepared for it. So if you're gonna buy an alert service, I would strongly recommend that that's the type of service that you get from that person, as opposed to them just telling you buy Zoom at $100. That's just my humble opinion on that.
Or we can just screenshot your watch list to make it easier.
Yeah, do that too. But I mean, it's not gonna, if you don't know how to
read the chart.
Yeah, it's not gonna make a difference if you don't know how to read the chart.
Well, I'm saying as far as the question on how you were able to compile your watch list.
Yeah. If y'all want to, write it down. Like,
do
your thing.
That's what I mean. Not as far as like the charting and stuff like that, but if these are the things that you normally play, then I think it's kind of like a good direction to go.
Yep, I agree.
Coach, what you think about CVS? I see that's on your watch list.
Yeah, that's just for me, that's a gamble. Somebody put it in the group, man. They had like those call options for like 40 cents or something like that. Let me see. Let me pull this up.
I think that was me. Put that in the chat. It is a gamble.
Yeah, I'm like, yo, if these options are 4 cents a piece, yeah, let me go. Excuse me. Let me go. Take $100 and buy a couple and see what happens. So, and I mean, based on previous years, you could see, just pull up the chart. What is this? 2019. No, this 2020. 2019. You can see like right around this time here, it starts to go higher. So I guess this may be a seasonal stock. So it did it in last year in 2019, and it did it again in 2018 too, where it went higher in November. So I don't know. We'll see. We'll see how it goes. If it goes higher, great. If it doesn't, oh well. I'm not risking much. Like the upside is crazy, but the downside is only $100. So I'm fine with that. Now I wouldn't advise you buy like $3,000 worth of that, but if you got it, go ahead.
Coach, but when you're setting up, when you're doing your charting, you're still reviewing the monthly, the weekly, then the daily for your day trading. Is that correct?
Yeah, that's correct. I don't even I can't even analyze pre-market unless I have those levels set up.
Okay.
Oh, another thing I wanted to tell you all, if you're gonna sign up for a alert service, ask to see their charts. If their charts don't look like this on whatever platform they use to day trade, if it don't look like this with all these lines on it, don't pay for that because they're not trading. Every single trader has their charts looks like this, like a mess. If it looks like CVS, where it's just clear, I would strongly advise you not to spend your money with them because they don't trade. That's a telltale sign of a trader. What else can I give y'all? Oh yeah, here's another strategy that I do. I mean, as you advance, you'll be able to take advantage of this too. So going back to pins, if you're gonna take a trade, right? Say you're gonna, for pins, if you took this put that I put in, what you want to do, even if you have your predetermined level of where it can go, you always want to sell your option or your stock. Like if it's not a stop limit, if it's not a sell limit or whatever, if it's a market order, you always want to sell into the momentum of that candle. What do I mean by that? If you bought puts and the stock is going down, you want to sell your options as it's going down, not as it's going up. Invert. And on the flip side, if you bought calls, you want to sell as the stock price is going up and as a candle is moving up, especially if it's a market order. That way you get, optimal profit margins as opposed to you waiting for a pullback, especially with options. You know how the price fluctuates a lot, especially on pullbacks. So you kind of want to avoid that and just sell. If you have calls, sell into the up thrust. If you have puts, sell to the down thrust. Sell into the momentum. That's another, little technique I use too.
So do you ever scale?
Yeah, I scale out too. Like if I have like 10 options, like save, that's what I did with, where we at? That's what I did with pins. When I got in at 67.20, I made an announcement like, yo, as it was going down, I said, yo, I'm starting to scale out of my position. So I started selling them off one by one until I was finally out of it completely. But it's all up to you. It's all up to what you want to do. Whatever. There's no hard set rules when it comes to this. As far as scaling out or selling your position, you just want to make sure that you're profitable. So for another strategy you can use for pins, when you got in at 67.20, you could have moved your stop loss down as the price was going lower too. You could have did that also. So that's another strategy you can use to protect your profits. So it just all depends on what you feel comfortable doing and what you want to do. But yeah, the scale out technique, that's something advanced traders do. Also, advanced traders, they add to their position. As soon as pins broke 67.20 and it broke 67, you could have bought more puts. because you're anticipating a move lower. And then you could have started to scale out. So, I mean, that's just something that's going to come with time and experience.
So adjusting your stop loss, would you had once it started pulling back, would you had move your stop loss to like your original entry? So if it reversed, you wouldn't have lost no money, or would it have been a trail stop loss?
Exactly. So if I got in at 67.20, my stop loss would have already been at like 68 or something like that, maybe even up here to account for slippage. So as it's going lower from 67.20 to 66, I'm moving it down from 68 to 67.20. So that means I'm breaking even, right? No matter what happens, I'm not losing anything. Now, as it's going from 66 to 65, I'm moving it from 67.20 to 66.
Okay, so you start with the hard stop loss, and then you trail your stop loss as you go deeper and deeper in profits.
Correct.
Got you. Thank you.
Hello, quick question.
Mm-hmm.
Sorry, I'm new to here. So would you move your, because break even is actually your entry plus whatever the fees are? Is that what you're including as your entry? So that you actually do?
I don't want to say I don't care about the fees, but I don't take that into account at all. I mean, the option fee is like what, 50 cents, I think, to execute both ways. So that's $1. I'm not really concerned with that.
Okay.
Me personally. But I mean, if that's what you wanted to do, you can.
Hey, Coach, do you trade Tesla? I imagine the IV is pretty high on that.
Tesla? No, I don't trade Tesla. Only reason why I don't trade Tesla because it's like Zoom. I think it's more mental for me because I don't trade Zoom because I got burnt in Zoom back in like a while ago. Like, let me see, Tesla has an ATR of $20, so it's gonna move. Like, let me see, just on a 2-minute candle. Yeah, this 2-minute candle was, what is this? Yeah, this is a $3 candle right here.
I think Marcus played that on Friday.
Yeah. Like, me personally, I can't stomach that. Because if you know anything about options, man, if you bought puts here and then you didn't get out on this candle and you got caught in this, man, please, that thing will take you out. Because that's a $4 candle right there. And you know what that does to your premium.
Yep.
So like Zoom is another one. Like, Zoom makes crazy moves. And I got burnt by Zoom a long time ago. So I think it's more mental for me why I don't trade Zoom. That's all that is. But the analysis is perfect. Like, I think I charted this up a while ago, like 2 weeks ago, and it's still sound. Like, for Zoom, you can see there's a gap fill down here. Well, not fill, I'm sorry. There's a gap down here around the 350 level. This is a monthly chart we're looking at. Now drop down to the weekly. Yeah. It's still above the 50, moving average. So there is a strong chance that it can go down to this gap. But I mean, it has to hit a couple levels before it gets there. It has to hit this level, then it has to go down to this level, then this level, then it'll hit it. So do I think it'll go down there? It's not out of the realm of possibility, but I'm not gonna, bet on it because it already broke the monthly support level right here of 467. Let me just go down to a lower time frame.
Do you have the 9-day on this?
Yeah, it's on this. This one, 9-day is the that light blue color.
Okay.
So yeah, even when I first drew the technicals for this a week or two ago, it's still sound. It still held up. What day was that? The 29th? Yeah, when Lily played it, like this was to the T. Look, it broke. It broke this level of 511. You could have got in right there. You could have got in at 511. Then it broke 508. You could have took that bad boy all the way down. especially since you see it broke the weekly 502. I would have got out right there at 502. But I mean, hell, let me drop it to a lower time frame, to a 5 minute. Yeah, I definitely would have got out right here at 502. So I'm thinking maybe it may not continue to break and go further. But I got in at 511 and rode it to 502. That's a hell of a move in options. Like, that's a nice bag. So don't be greedy. Take your money and go home. But as you can see, when it did break this weekly support at 502, it came right back down to the daily level 492. So this was textbook. Like, all those technicals are still in play day by day. So that's why when you chart it up, it still makes sense. And then if you know the ACR of Zoom, what is it? It's not even on my list.
What's the IV on it?
Hold on. The ACR is 30. So you can, sheesh. So yeah, the ACR is 30, the IV. I guess for this weekly is, what is this? 82.
Wow.
But for puts, it's not even, damn, it's not on here. Yeah, it is 81. Yeah, 81 for puts. So I mean, would I have touched this? I don't know. It all depends on, you know, the momentum of this stock. I see that this is a strong downtrend. So yeah, knowing me, even though it's above 40, I probably would have took this trade. This was a hell of a trade right here.
It was.
And all of these technicals are still sound, even though I made this a couple weeks ago. This is still sound. You see how it reacted to the price levels. 511 it broke, 508 it broke. Then it came down to 504, or then 502. It broke that, then it came back down to 492. And you can expect a move like this because the ATR is 30. So that's not out of the realm of possibility for Zoom to make that hell of a move from 512 to 492. But I'm not going to wait on it to go to 492. I'm getting out at 502. I'm taking my money and going home.
Lily, did you play Zoom?
I did. I got out at 497. But yeah, I did the $34 drop.
Woo!
Made that what?
She got paid. And that happened in, these are 5-minute candles. So 1, 10, 15, 20. This all happened in less than 30 minutes.
Yeah.
You just made more than 30 minutes, and most people make in a month.
I lost it all on Monday, on Friday. So we're good.
Well, damn.
I know.
Oh, that's another thing too. Like, if you catch a big move like that, like, do you know what that does? Crazy things to your mental and to your endorphins, because now you're on top of the world. Like, you feel like you're just the best trader ever. You catch a $30 move. So for me, if I'd have caught a move like that, I'm taking off for the rest of the week. I'm done, because I already hit my goal for the week on this one play. Because what's going to happen is you're going to start to take more risks, because you're still riding that high from this move right here. From this $30 move, you're going to take that same mindset into the next, and you're going to expect that with the next trade that you take. And that's not necessarily the case. So for me personally, you don't have to do this, but this is just what I do in order to stay disciplined. If I get a hell of a move like that, where I meet my weekly goal, it exceeds my weekly goal, I'm done for the week. I'm done. I'm not trading anything else. Now, I will still come back in the morning and watch the move, what's going on, but I'm not making any trades because I already met my weekly goal. And I'm still, you know, I don't want to ride that high and take on too much risk of giving it right back to the market. You never want to give your money back to the market, ever.
Although I didn't lose it on the day trade, guys. It was a swing trade, so.
Oh, it's
yeah.
Okay. I thought you lost on a day trade, but it's still relevant.
Yeah.
For me, at least. Yeah, if I make huge moves, I'm done for the week. You just got to know yourself. You just got to know your temperament. You got to know your mental. And for me, I know myself, so I'm done for the week. That's it. And it's okay to just come back and just watch the trades as they unfold. That way, you know, you can still get better at it. Because you're gonna see, because if you're gonna, when you start day trading, you're gonna see these same setups over and over and over again. These same setups.
This 9-day moving average is new for me. I've never used it before, so.
Yeah, if you're gonna date, yeah, I use it for day trading. It's basically just a trend.
Okay.
It's a trend line. If you don't know how to draw your own trend lines, yeah, that's what you can use that for.
Yeah, that's a real gem. It makes it so much easier.
It's just a trend line, same trend. And remember, the further away it is from the 9-day moving average, the stronger the trend.
Okay.
And then it's gonna snap back to it eventually. It's like a magnet.
Can we look at Facebook too?
Facebook has a gap right here. What is this? 244, 235, 244. There's a gap here. Technically, you can say it touched it on this candle at 244.13, but it didn't fill it. But yeah, do I expect this to go back down here? No, it all depends. If it breaks this monthly support level of 253.70, you got a good chance of it filling this gap. But right now, there's nothing here that tells me that it's bearish. Only thing it's doing is moving sideways. That's all. It's moving sideways within this range, within this weekly support and resistance level. That's all it's for the past 3 months. It's just been moving sideways. Let me go down to the weekly. You can see it clearer here. That's all it's doing, moving sideways. That's it. It's not going up. It's not going down. Just sideways action. So you can't say, even though the market sold off on Friday, you can't say, oh crap, let me buy puts expecting it to go to 244. You need confirmation. Where do you get confirmation? When it breaks this weekly line of 259, you can expect it to go down here, possibly to 253. If it breaks that, then yeah, you got strong confirmation that it's going to fill this gap right here. But yeah, as of right now, it's just moving sideways. It's not doing anything.
Okay, thank you.
I think someone asked me about being efficient using the ThinkorSwim platform. Let me come back to that. Yvette, when you have a goal and you're trading plan, okay, yep. You all right, Yvette? So I forgot who it was who wanted to know about efficiency. So with ThinkorSwim, if you look over here to these tabs, there's something called Active Trader. And what you can do is pull this up. And what you want to do is go to this setting, the configure, and add something called TIF, T-I-F. Add that to it, press OK. And what the TIF does, it allows you to set, hey, this is a day trade I'm making. So this limit order that I'm putting in is going to be good for the day. If you want to do a swing trade, you can go ahead and put good till cancel. But for day trading, select day. If you're trading the equities, you just go down here. If Facebook is currently at 260, and you say, hey, my entry point, I want my entry point to be 225. Go ahead and change the quantity up here. So however many shares you want to buy. These buttons right here, the 100, the 300, and the 500, that's just by default. So always pay attention to the amount that you plan on buying. So if you want to buy, one share or whatever, go down here and then just select it, and then it'll tell you, hey, you can go ahead and buy that order, and then you just send it through. press send and it'll go through. Now, how you do that for options? Same thing. Remember how I told you all how to find the option? Wait a minute, let me do this. To find the option chart. So copy and go back to the charts. Pull this up. Paste it in there. Then drop it down. I don't have to drop it. Let me take this off. I always remove the theoretical option price. I don't care about theory. I need to know what it's doing. Yeah, and then on this tab for the option chart, you can pull up the active trader again, and now you can place an order on ThinkorSwim based on the price of the option if you want to day trade. So you don't have to say you think, based on the chart movement over here, based on the equity movement, you can kind of time it to piece it together, because these are going to be moving in unison, especially if you're on the same time frame. The 2-minute time frame on the option chart and the 2-minute time frame on the equity chart is going to be moving in unison. So if you spot something that says, hey, I want to take calls at 8 for my Facebook, you can just find the 8 limit and then just put a buy in. Change the quantity, so however many you want to put in there, then just place it like that, as opposed to looking at it on this screen and then trying to pull up the TD Ameritrade website and doing it that way. You don't have to do that. This is what's going to make it more efficient, the active trader. If you're going to day trade, this is going to make it extremely efficient.
Do you use Power E-Trade? Because I know you use E-Trade.
No, I just use regular E-Trade.
Gotcha.
I haven't had the time to sit down and learn it.
So you have to copy that chart for each trade you want to make to buy it on this?
Yeah, for each, for whatever underlying equity.
Yeah.
To the trade tab, you pull up the symbol. For me, it would be weeklies. If you already did your pre-market analysis, you already expecting to buy something that's near or in the money. So you just copy it and then just go back to charts and paste it over here.
Okay.
And then you can make sure it's on the same time frame too. So you're looking, you have a 1-to-1 view of what you're looking at. And then just pull up the active trader and get to work.
Okay.
And let me put this the replay for the ThinkorSwim TOS sessions. I'm putting that in the chat now. So that's for that. And then also remember, there's a technical analysis workshop coming up on the 2nd of November through the 5th of November. And here's the link so you can register for that. But remember, if you can't make it, I'll see how to get my hands on a replay. So that way you have everything you need as far as supplemental, education. Now it's just time for you to put in that work. These are the keys I'm giving you. So you just got to put the key in the ignition and drive off. That's all on you. And if you don't have the time, or if you don't want to day trade, what'll work best for you would be, 1, what Mark is doing is long-term investing, and then 2, swing trading. Because when you're swing trading, you're looking at a higher time frame of what you can expect this stock to do. So for Facebook, if I was if I was swing trading this, and I expected it to move lower based on my analysis, I would say, yo, if this breaks this weekly of 259.62, I'm going to go ahead and buy it there. I'm going to put, so the range is so wide for Facebook, but I'm not going to have a 280 stop loss. That's insane. I'm going to go probably here to the close of this candle, 262, right? I don't want it to go above 262 at all. That's my stop loss. Here's my entry. And then my target, the optimal target would be 253.73, which is the monthly support. But I would probably get out at like 255, which is at this candle right here. That would be my exit. So stop loss, entry, exit. So now you've already analyzed the stock. When the market opens on Monday, you can just go ahead and put the trade in. You already got your parameters and be done with it. You don't have to sit here and watch this move every single second. So swing trading is something that you can definitely take advantage of for sure, if you don't have the time to sit and watch the charts all day. But it all goes back to it all goes back to knowing, your technical analysis, your candlestick analysis, your patterns, what the candles mean. Not necessarily you don't need to know the name of the candle. If you want to be a scholar and figure, and say that, hey, I know what a hammer is, or I know what a doji is, I know what a spinning top is, I know what an engulfing candle is. If you want to learn all that stuff, you can. But the most important thing to know is when you see this hammer right here, you need to know what it's going to do. You see a hammer, that means it's going to reverse. That's a reversal candle. That means that this candle once looked like this, where it's red all the way down. But you see these wicks, this wick, that means that buyer stepped in and moved it higher. So that's a good indication that price movement is going to change and go up. You also need to know your technical analysis, your up and down trends. The technical definition of an uptrend is a higher high, a higher low. The technical definition of a downtrend is a lower high and a lower low. You need to know support and resistance. You need to know how to read these channels. What else? You need to know your chart patterns. Your double tops, head and shoulders, triple tops, your flags. And this workshop that's coming up, I think they go over all that stuff. Yeah, they on day one, you're going to learn the basics of how to chart. Day two, you're going to learn about candlestick patterns, how they can be used, how to recognize them. Day three, you're going to identify price patterns, which is basically, I guess, trends. For those of you who like to use indicators, they're going to show you some of that stuff. So I'm guessing that's the RISI and the MACD and whatever else. And then on the last day, they're going to show you some flag patterns. Yep. So remember, if you can't make this live, I'm going to try to get my hands on the replay. That way you can have this in your arsenal along with this. If this is your platform of choice, you have this to go along with the technical analysis piece. So you have everything you need in addition to whatever course you already have. Yeah, exactly, Sean. You can download the reference guide too. So yeah. If you don't have time to watch these charts, go ahead and learn how to swing trade. That way you don't have to, you do your analysis. That way you're better than 99% of the people who do trade, swing trading or day trading or otherwise. You already got your analysis set up. You got your stop loss. So you got your risk, you got your entry, and then you know where you're going to take your profit, and then you're done with it. Oh, also, when it comes to swing trading, I don't buy weeklies for swing trades ever. I go out at least 3 weeks to a month.
When'd you get out?
I get out when it hits my target.
Okay, no matter how quickly it hits it.
Correct. Yeah, I say discipline. I don't care that there's more moves to the upside. To say my target is on puts for Facebook. Say my target is 255. I don't give a damn that it could possibly go to 253 or down here to fill this gap. I don't care. I'm taking my profit and I'm moving on to the next.
Can you recover from IV crush, or is it game over at that point?
You mean like mentally, or you mean like from your account balance?
No, your account balance.
Yeah, you can, but you're gonna like from IV crush, man. Your day trade is gonna turn into a swing trade, and that's not. And if you hold on a weekly, you burnt chicken, because that beta is gonna eat you up. So it's best to just take your L and just move on to the next. Yeah, Marcus, secure the bag. Do we have any other questions?
I have a question. Like, say, the uptrend, like how Neo had on, I believe it was either Thursday or Friday. And say you got in around, so you did a technical analysis and you got in around like 29.60. I think that was like a level I tried, and you really don't have a indicator. What's your indicator if there's no indicator above that per se?
Wait, I'm sorry. Can you repeat the question?
Okay, so Neo, it hit an all-time high. So if something's hitting like the all-time high, what's your indicator in that sense? If you're doing a play like that, like there's nothing. Is it the ATR or?
It's the moment for me. It's the momentum. It's not going to show it. So yeah, the day on Thursday when I was doing my pre-market analysis. Yeah, like you see the high of 32.20.
Yeah.
Imagine it was the high of 20. What was it? 29 something.
It was like 29.40 or 60 or
29.40. Yep.
Yeah.
Excuse me. It was so that said 29.40. So I said, yo, based on this momentum, was I looking at a 15-minute? I might have been looking at the hour chart. Let me see. So this one happened on the 29th. So I was looking at the 28th. I was looking at this day here. I said, yo, based on this momentum, and you can clearly see it's in an uptrend.
Right.
So this was my indicator or my probability of thinking it was going to go higher. The pre-market, it was going higher here in the pre-market. So I'm like, yo, this thing looks like it's ready to beast. It's ready to go. This is momentum. This is all momentum. That's all that is. And then, looking at this 5-minute chart or time frame, I'm sorry. As soon as it opened up, it never broke this predetermined level of 29.40, 49. How did I come up with that? I just looked at the pre-market and I found like 2 or 3 areas where it connected. where it touched. So there's a touch right here. There's a touch right there. There's a touch. There's a touch. There's a touch. Here's another level where it touched. So I said, yo, if I have bullish sentiment, I need it to go above 28.49. As long as it stays above this, I'm fine. Because as you can see, it went above it and they brought it back down to it, pre-market. And then after it went lower, they brought it right back up to it. So that let me know, or that gave me a sense that it could go higher. So that was my indicator to say, yo, as long as it stays above 28.49, which is already predetermined as my support, I can go higher. And I know how high I can go based on the ACR, which is 185. So I'm not expecting this to go from 28 all the way to 35. Right. I'm expecting this to go from 28 to maybe 31 max. And then I'm getting out.
Okay. Thank you.
Mm-hmm.
Coach, can you explain an ATR?
Yeah, it's just it's an indicator. It's just I don't want to. It's just a volatility indicator that pretty much can tell you how much the asset or the underlying equity can move on average during a given time frame. I believe, don't quote me on this, I think it averages up the previous 14 days. Because that number is going to change these ACRs change all the time. And I think they change, every 14 days or so. So yeah, you're going to know that, hey, Neo is going to move roughly $2 up or down every single day. And you could back test this ATR by going to your day chart and looking at the candles. So you can, this candle here, the low was 26.03, the high was 28.46. That's $2. This candle, the low was 25.46, the high was 27.35. That's $2. This candle, the low was 26.81, the high was 28.48. That's $2, right? That's how you could, back test it. Now, sometimes like this candle here, 23.73 is the low, 26.96 is the high. That's just an outlier, but it's going to get calculated into the previous 14-day average true range. Does that make sense?
Yes.
Do you have a minimum that you look for?
Yeah, one. Well, no. I'm sorry. I look for a dollar move in all my trades going up or down, but the minimum ATR I like is a 3 minimum. But whatever you want to do, it's like all that stuff is up to you. Like again, my criteria is the stock price has to be $20. The market cap needs to be $1 billion. The volume needs to be at least 500K. So for Neo on this day, you have 40 million transactions in one day. So that far exceeds the volume. The spread, I like it to be between 1 and 10 cents. I don't think this is accurate, the bid and the ask here where it says 2 cents. I think a more accurate way to look at it is when the market is open and you'll clearly see what's really going on between the buyers and the sellers. But yeah, I like my spread to be, no more than 10 cents. And then the ACR, I like it to be, between 3 and 4. But as you start the day trade, you're gonna develop your own criteria. You're gonna get in your own bag. Like you don't have to follow. So the foundation, you follow that to the T. Like don't be greedy. See profit, take profit. Knowing your candlestick analysis, knowing your technical analysis, knowing your chart patterns, knowing your moving averages, like knowing the 9-day moving average is used as momentum. Knowing that the 50-day moving average, that institutions like to use that to buy or sell if it goes up or down based on price action. And knowing that the 200-day is telling you that institutions like to trade stocks that are above the 200-day moving average. Like just knowing that, that's your foundation. Everything else, like what I just gave you, the criteria, you'll start to establish your own criteria as you start to trade. So you may say, hey, I want to take advantage of small caps. I want to trade, stocks that are between $5 and $10. That'll be completely up to you. Like you'll start to say, I want to trade stocks that have a market cap of less than 500 million. You just establish your own criteria, but that's just my criteria. It's not set in stone. It's not like a hard follow. But the other stuff I gave you, like the foundation, the candlestick analysis, technical analysis, chart patterns, moving average, don't being greedy, knowing, you're keeping your mental intact, having no distractions when you trade, avoid trading when you're having a bad morning. Like, yeah, that's foundation and that's solid, and you want to stick to that script every single day.
Got it.
Yeah, doing your pre-market analysis, knowing when you're going to enter into the trade, knowing what your stop loss is going to be, and knowing when you're going to take your profit. You're doing better than 99% of all traders just by doing your pre-market analysis. Because you have a higher probability, what's going to happen, or the probability that could happen. Because the goal, it shouldn't be to make money. It's deeper than that. The goal should be to aim for setups that have a high probability of following through based on your analysis. That should be your goal. Like just making money, that's surface level. You got to go a little deeper than that.
So is it fair to say that you don't know what you're going to trade until the morning of?
Correct.
Okay.
That's accurate to say.
Okay.
That's 100% accurate. I don't know what I'm trading until I go and analyze the trade. Oh, I'm sorry. Analyze the stock.
Right. The market watch. Okay.
Mm-hmm.
Hi, I'm new. Where are these recordings at? Or where do you keep them?
You can find the recordings on two places. There's a Facebook group called TPD Gen Wealth. You can find it in there, and then you can also find it on YouTube. The YouTube page is, I believe, the same, TPD Gen Wealth. Somebody correct me if I'm wrong.
Okay, thank you.
It's TBD.
Yeah, there we go. Thank you. T as in Tom, B as in Bravo, D as in Delta. Yeah, here's the Facebook. I'm sorry, the YouTube page. And make sure every Sunday, man, y'all check out the Market Bullies. I think they do this episode every single Sunday with Kels and Lala. They give you a solid recap of what's going on in the market for investing. So check them. Make sure you check them out.
Great, thank you.
All right. What else, y'all? That's pretty much it for me. What else, y'all got any more questions? We can just freestyle it. Whatever y'all want to do. I got time.
Coach, I like that you shared a video with us the other day, and I guess I'm not sure if you'll be able to do it, where I guess you were doing like determining what the next candle would be. There was like is it called the watch, like not market watch, but you can actually rewind and, like, let's say look at Friday, and we can actually take a look at a specific stock and kind of see how the candles moved. Is that something that you can possibly do? Maybe not today, but in the future, like?
Yeah, ThinkorSwim has. That's why I think I know. I think I know what you're asking me. You want to see if we can do like a simulation of a
Yes, there you go.
All right. So yeah, ThinkorSwim has this feature called On Demand. I don't know if this is going to work here. It depends on the internet connection. So with On Demand, you could literally go. Let me see. Up here, you can change this date to what was it? Damn, it won't show us Friday. It can show us Thursday. So you could go back to market open at 9:30, and it'll literally populate as if it was in real time at 9:30. So this is the Neo trade right here. Can y'all see that on the screen?
Yeah.
Let me drop that to a lower time frame. So this is the 2 minute. You see how these candles are forming? So this is what I'm looking at. See how it's pretty much they're fighting. They're fighting to keep it above this 28.49 level. That's all they're doing. It's just a battle right now. And this is just a 2 minute candle. So I don't know if y'all wanted to do like some type of role play where this is what's going to get you a lot better too, to identify your entries and your exits. Because one thing you can't hesitate. When you see it, you got to just take it, for one, and because if you don't take it, you're going to miss your entry, and you know that thing can just take off, kind of like how pins did. You don't want to hesitate, and for two, you want to anticipate. That's why you do your pre-market analysis, because you're anticipating what's going to happen. That way you don't even need to hesitate. You just take the trade. For day trades, I use a 2 and a 5 minute. So sometimes I'll have it up. Usually I have it up like this. I have up two charts. Especially if I'm in the trade already, I'll have up both of these charts right here. Let me load my style. Yep. So I have the 5 minute on this side and then the 2 minute on the other side.
And you're only in one trade at a time?
Correct.
Okay.
I'm only in one trade at a time because Now I'm also, remember, I told y'all I have another monitor over there. So I have my eyes looking at other setups, but I'm not taking that trade until I get out of this one.
So with you using the 2 and the 5-minute chart, how long do you take to say establish the trend? Because I know like a lot of times people say wait 5 minutes to see,
It's personal preference, but sometimes the more you start the day trade, the more you just know, to just take the trade.
Right.
Like,
okay.
Like looking at Neo on this 2-minute candle, I think that's when I just took it. I said, yeah, I'm in what was it, 28 or 29 calls. I just took it, boom. Like, I'm like, yo, because they tried to pull it down on that first candle. They tried to pull it down below support. Then they brought it right back up at that level of 28.49. So I just got in it. I'm like, yo, this thing finna ride. So I just took it. And then even on the 5-minute, if you don't want to see how you don't even see this red candle, this first opening, that's a strong.
Yeah.
So really the 2-minute is giving you I don't want to say better entry. It's giving you a good entry point, and the 5-minute is gonna it tells me how long I can stay in the trade based on the trend. That's what I use it for.
Okay.
But yeah, I'll have the 2-minute and the 5-minute up so for market open at 9:30 all the way to about 10:30, maybe 2 o'clock. I'm sorry, from 9:30 to maybe 11 a.m. These two charts will be on the 2-minute and the 5-minute as the day progresses. Let me change this time to maybe around 1 o'clock. Why you want to change, homie? I don't know. Let me see. Yeah, it's gonna take a while to change. But either way, as the day progresses, I switch over to the 15-minute time frame, and then on this side will be the hour time frame. That way I'm able to see what the trend is. So I know if I'm looking at it and I see that it's in a channel or it's in an uptrend, I can come in and make annotations to say, at 1 o'clock, I see that this could be used as a point of resistance right here.
Yeah.
I can come back and set an alert to say, yo, send me an alert when it gets past, what is this? 27.52. When it gets past that, I can come back and look. I already identified the trend, so I can then place calls and get in and catch this next uptrend for this hour. And I will only do this for multiple time frame if I missed a move in the days, if I missed a move within 9:30 and 10:30. That's the only time I will come back and try to analyze what's going on this hour chart. Does that make sense?
Yeah. Thank you.
So we can definitely do like a scenario role play for what's going to happen using the on-demand feature and ThinkorSwim, and just play some stuff out. We won't do it today, of course, but we can probably schedule that sometime later. But that's definitely a tool you can use in order to get better with your entries and exits, because your pre-market, your analysis is going to give you is going to set you up to anticipate the move. That way, hopefully, it eliminates you hesitating placing the trade. Because if you hesitate with the trade, you missed your move, and that's it. Now you're chasing it, and it goes bad from there. like with pins. Let me pull this up. To the 2 minute. Like with pins, yeah. If you miss this second candle, this was the second candle. If you miss this, me personally, I'm not touching it. I'm letting it fly. I'm moving on to something else. But yeah, we could definitely do the on-demand thing, and it'll let's try to schedule it, especially after you all take this technical analysis workshop. So then you'll be well prepared to even, try to time, do your analysis and try to get your entries right, and your exits and your stops, because you got your technical analysis, and then you know how to use the platform. So now you just got to put it all together. Yeah, CTSH. Yeah, Lily, you can't hesitate. You got to just go for it when you see it. What day was that? The 29th too? Yeah. What was the analysis on that? Let me see. Yeah, CTSH needs to hold 75.20 for support.
That was a quick one.
Yeah, it was quick. You got to be on your toes.
Yeah.
You need to hold this for support. If it held, take it for a bullish move upside. And remember, I only look for $1, so you could have just got in on this first candle and just took it.
By the time I switched over to TD to make my order, it was too late.
Late, yeah. That's where the efficiency comes in. As a matter of fact, you probably would have got in on the second candle, because the range of this second candle was 75.44 to 76.45. So that's $1. Could have got in on this candle and got out. Because you're seeing that next candle, it would have took you out.
Yeah.
That's why if you miss this move and you try to get in up here thinking it's gonna go higher, and then this next candle come in, you're done. Yeah, and then you can see it just trending all the way down. Shoot. So see profit, take profit. Don't be greedy, because if you being greedy thinking it's gonna keep going up,
That's a struggle.
Mm-hmm. And this is all happening. In fact, this happened in 2 minutes. So that next candle, you'd have been done. All right, we have any more questions? Anything y'all want me to look at?
So for that role play, are we going to have to do it during the week?
No, we can just use the on demand.
Oh, okay. That'll be a cool session.
Mm-hmm. You are welcome. How do I pronounce your name? Sharice? If I said it wrong, please correct me.
No, you're right, Sharice.
Okay.
Yep. Thank you so much for your time.
No problem. Thank y'all for coming.
Thank you, Coach.
Yeah, if there's no more questions,
Thank you.
Thank you, Coach, and I appreciate your time and everyone else for joining in. And I guess I'll see you guys next time, and I'll keep you posted on that upcoming session for the on demand.
Oh yeah. Before you end it, make sure you all have some time for next week's call. They're gonna go over well, I don't know what they're gonna discuss, but I know it has a lot to do with mental health and psychology, and that plays a huge role, especially with day trading. So yeah, make sure you set some time and tune in for that one, because that's gonna be a great session.
Yeah, absolutely. Yeah, next Saturday we got mental health person coming in to speak to us about that. in tune with our mental health, especially going into these holiday months, just to make everyone aware of that as well. Thanks for reminding me, Coach. Appreciate that.
All right, thank y'all.
Thank you so much.
Thank you, Coach.
Hey, Coach.